13,850. Hi Kunal, good morning to you. How are you viewing the trade this morning, considering today is the day for the weekly options expiry? Would you recommend any option strategy either on Nifty or on Bank Nifty?
Good morning, Navneet and Agam. I think yes, definitely the market is likely to poise on the upside. Some interesting data points to share on the Nifty index as well as on the FI index flow. Voice chala gaya.
Kunal, we hear you. Please go on.
Yeah. Yeah, so the thing is, we are seeing some kind of positive data even on the FI index long short ratio. Now, this is an interesting ratio at the current levels. It is currently trading at the levels of 0.27. Basically, this means the number of contracts FIs are short on the index compared to the number of lots the FIs are long on the index. So overall, this ratio always trades around the levels of 0.9 to 1, which is a fair value. But currently, it is trading at 0.27. If you go historically 5 to 6 years down the line data, you will see whenever the ratio is below the level of 0.3, this sees that within the next 10 days, Nifty sees a rally of 4 to 5% in the near term. So I think the data looks positive at the current levels. There is excessive pessimism that is happening at the current levels. Nifty is holding 10,800 levels, and as mentioned in the show, Nifty has formed an inverse head and shoulder pattern on the chart front. So I think all the data are now supportive for a rally towards the levels of 11,200. The first initial hurdle is at 11,000, where the highest open interest is built up on the call side. Once that starts getting unwinding, we will see a quick rally towards the levels of 11,200, which is the next crucial and resistance zone for the index. Once that is taken out decisively, 11,200 on a closing basis, expect Nifty to rally towards the levels of 11,500 to 11,600 kind of a zone. So even in the near term, the data looks positive from the current day. Even on a positional basis, one can definitely look to long index at the current levels with a stop loss of 10,800 on a downside for targets of 11,200. That is the first target, and if that is crossed decisively on the upside, we can see even rally towards the levels of 11,600 kind of a zone. Coming back to the expiry point of view, I initiate a bull call spread on the Nifty index. Since 11,000 call has the highest open interest build up, I'm expecting expiry to be around those levels, 11,000 kind of a zone. So one can buy a 10,900 call at the current level and sell a 11,000 call on the upside. Basically, the strategy deploys a bullish view on the index, and I'm expecting expiry towards the levels of 11,000 kind of a zone. So one can initiate this strategy at the current levels. The strategy is trading at a debit spread of 25, and one can expect a reward of 60 to 75 on the upside, which is the maximum reward on the upside. The downside risk stands at 25 rupees, which is the debit spread you are paying for the strategy. So the view on Nifty still stands positive. Similarly, the view for Bank Nifty also stands positive, but I think Bank Nifty needs to cross 27,300 on the upside. Once that is crossed decisively and we close above that, then expect a sharp rally in Bank Nifty towards the levels of 27,800 and 28,000 eventually. So overall view for both the index stands positive for the current expiry, and even for the September series. We are poised for a rally on the upside in the near term, and the view stands for both the index on the positive side. So for Nifty, my strategy would be a bull call spread, and for Bank Nifty, only buy about 27,300 with a stop loss of 27,100 for targets of 27,600 to 27,700 on the upside.
All right. So
Kunal, what about you? What are you recommending in trade?
As I mentioned, the view still stands positive on the index. I think for the first, my pick would be L&T. We have seen some kind of fresh put writing happening at L&T 1300 put strike, which is now a very strong base for the stock in the near term. So as long as 1300 is not breached on the downside, expect a rally towards the levels of 1360 to 1380 kind of a zone, which is the resistance level for the stock on the upside. So at the current levels, one can definitely look to long on L&T with a stop loss of 1300 for targets of 1360 to 1380 on the upside. My second pick would be Cummins India. See, overall the stock has been definitely in a downtrend, and we have seen continuous selling pressure coming on the upside. But if you talk about the last 2 to 3 weeks, we have seen the stock bouncing from the support of 555. Now this is a very crucial junction for the stock. If that is breached, then definitely further downside is there. But at the current level, the risk reward looks very favorable on the upside, and one can definitely look to buy at the current levels with a stop loss of 555 for targets of 575 to 580 on the upside, which could be coming in the near term. So overall, the stock definitely remains in a downtrend, but we can expect some kind of a relief rally into the stock where it has trying to form a base formation around the levels of 555 kind of a zone. So Cummins India would be my second pick. Already the oscillators are in the oversold region, and we can see some counter rally coming into the stock towards the levels of 580 kind of a zone. So definitely Cummins India is an attractive buy at the current levels. One can buy with a stop loss of 555 for targets of 575 to 580 on the upside.
All right.
Okay, that's ONGC for you, but the next counter is LIC Housing, which has been trading weak, and in today's session we've seen both price as well as open interest action. Look at that, 21% higher OI build-up coming up for LIC. The stock's down 5% today, but it's been trading in the negative territory for the last 3 sessions. Kunal, on the charts, if somebody is already holding short positions here, what would be the target on LIC Housing on the downside?
See, overall, if I talk about the stock, now the stock is trading at a crucial junction of 385, 380 kind of a zone, which is now a crucial support for the stock. So at the current levels, definitely the stock is weak, and we have seen continuous selling pressure coming into the stock from the upside. So I think somebody who is even holding the stock, I think hold with a stop loss of 380. If that is breached on a closing basis, then I think all long should be exited from those levels. We can see further downside even towards the levels of 350, 340 kind of a zone on the downside. Overall, since the stock is trading at a very crucial support juncture, I would say no need to initiate any fresh trade at the current levels. Let the stock react from the support levels. If the support is held in the near term, then definitely we can expect some rally coming into the near term. But at the current level, for any new fresh buying, avoid the stock. But anybody who is holding the stock, keep a stop loss of 380 on the downside.
Okay, and
October futures of Canara Bank sold at 201. What would you advise him to do, considering the momentum has been on the downside, especially for these PSU banks, and Canara Bank being one of the anchor banks? When the news of consolidation came about, there was heavy shorting which came in for this counter.
See, definitely, even looking at the long-term charts, Canara Bank has breached the support of 210, which was a crucial support for the stock on a long-term chart basis. Definitely, the stock is in a weak trend, but I think at the current levels where the stock is, one should look for levels of on the downside, 180 kind of a zone, 185 kind of a zone. Probably there is a zone where we can see some kind of buying coming into the stock. At the current levels, definitely the structure looks very weak. No position at the current levels, I would say. If anybody is holding the position, then one can look to exit on bounces towards the levels of 200, 205 kind of a zone. But at the current level, the stock is quite volatile and has breached the crucial support of 210. So definitely the trend is on the downside in the near term. The stock can even test levels of 185 to 180, there could be some kind of buying even coming into the stock. So overall volatility is likely to be high into the stock in the near term. So my advice would be avoid at the current levels, and if holding, then hold it with a stop loss of 180 on the downside.
okay, a query on the bank Nifty 20.
I think definitely on the index, the view still stands positive. So even considering HDFC or ICICI Bank, I'm looking for a good upside of 3 to 4% coming into both the stock in the near term. So my advice would be to stay long, and even if HDFC is down by 1.5% on the downside, I think it's a good opportunity to build fresh new long positions and look for an upside of 3 to 4% in the near term.
Okay, there you have it, guys. We've run out of time on the show, so I'm going to take a moment to thank both our experts, Ashish and Kunal, for